Before we get into today's video, which is about the expanded public service loan forgiveness legislation that is here and has taken permanent effect in the month of July, I want to mention, if you are a public servant, which means you work for a nonprofit or government, and you do not have the servicer MOKILA, that means you are not properly enrolled into public service loan forgiveness. And it's really important that you listen to this video. If you like this content and believe others could benefit, please share and subscribe. Now on to today's video. Today's July 25th, and I wanted to go over the new public service loan forgiveness guidelines that went into effect July of this year. So I want to go over the full rules, how it's different from the public service loan forgiveness waiver, as well as the income-driven waiver that Biden passed to get people as many payments counted as possible. If you think this is a new background, it is, because I'm in an Airbnb about to meet everybody from the LoanSense team in person at our biannual retreat. Really excited about that. But I did not want to miss bringing you the updates on the rules that have been passed for public service loan forgiveness. So that is what this guide will contain. So first and foremost, the item that I think is most compelling about the update, I will bullet point high level, and then I'm going to go into some details. So there are 5 parts of this new rule that came into effect in July that I want to go over. I know the news is fixated on Biden's plan not passing, but let's focus on what has been passed that can benefit borrowers, right? The first thing I'd like to mention is that there's aspects of having student loan forgiveness count after consolidation. I'm going to go over that. I'm also going to go over having periods of deferment and forbearance count towards loan forgiveness, towards public service loan forgiveness. In some instances, I will go over what those instances are. And then I'm going to talk about borrowers being able to buy back time to count towards the 120 payments. I'm going to talk about that in more detail. Expanded employment criteria to count towards public service loan forgiveness. So that means more people are able to get their time counted and be considered public servants. I'm going to go over that. And then I'm going to go over relaxed rules for counting payments towards public service loan forgiveness. So that's the 5 parts of this video. So the first item that I mentioned is having payments count after consolidation. So the old and prior rules were such that if you consolidated your student loans, the payments that you had made prior to consolidation did not count towards public service loan forgiveness. And what the guideline has updated now is essentially allowing borrowers with non-direct loans, such as FFEL, that needed consolidation, they needed to do it in order to enroll in PSLF, right? However, under these new rules, borrowers will not lose public service loan forgiveness credit by consolidating existing direct loans. So let's say you had direct loans and you consolidated them, then you do not lose count. So the guidance is if you move from FFEL to direct, that seems to still lose count from what I've seen. But if you already had direct loans and consolidated to get a weighted average and consolidate your loans into one bucket of loans instead of 20 different loans, then what the payments you had made towards the loans prior to consolidation, as long as they were direct loans, will count. So that's first and foremost. Second point I wanted to make is periods of forbearance and deferment can count towards PSLF under some limited circumstances. It's under cancer treatment deferment, economic hardship deferment, which means you had a hard time paying. It will require some documentation. Military or post-active duty deferment, including National Guard duty, Department of Defense forbearance, AmeriCorps forbearance, and certain administrative forbearances. So those are the 5 instances in which you will get your time counted towards PSLF, okay? And essentially, how that differs from prior ruling also was that if you weren't enrolled in an income-driven plan and you just put yourself on forbearance regardless of the reason, they didn't count that time. Now it has changed, okay? And that's the difference. The third point of this video I want to make is that borrowers can buy back time. That's really interesting, right? And essentially, but because before, if you were in forbearance, deferment, whatever, you messed up on your student loans, you could never get that time back, right? So let's say, for example, you made a lump sum payment towards your student loans. Well, they only counted that lump sum payment, even if it covered a year's worth, they only counted it as one payment. So now they're saying that if you have a single month or multiple months in your payment history that do not qualify, you're considered ineligible, of course, but that if there are some limitations to the new feature, such as like if you essentially made a payment that is equal to an amount that is equivalent to what you've made under the IDR plan, excluding grace period after you graduate, then you can get that time counted, okay? So in-school deferment or grace period do not count for buyback, but periods you have made payments that were considered ineligible before, as long as the extra payments you made were at least the amount that you've made on an income-driven plan, you can get that time counted. That's an amazing feature, okay? Because before, if you didn't pay on time, paid more than 15 days late, made a lump sum payment, they didn't count any of that. Now, as long as you've made payments equivalent to what it would be on the IDR plan, as long as it's not during grace period or in school, then you can buy back some time. Incredible. And then, of course, now I'm on point 4, expanded employment criteria. So they gave more specific guidance. Before, you had to be counted full-time and 30 hours of employment for a public service organization, including nonprofit and government. Now they've made it so that if you work at least 30 hours, even if your employer doesn't consider you full-time, also if you live in a state where the public service organization can't employ you directly and they must employ you through a contracting organization, as long as the core organization you're working for is a public service, is a nonprofit or government, then you can get your time counted as PSLF. They also gave some more guidance around if you're an adjunct faculty member at a university, that they gave criteria around how many contact hours are taught each week times by 3.35, then that, as long as it adds up to 30, there's guidance around that as well. Then as long as it adds up to 30 hours, you're an adjunct professor, that will also count. So they're giving much more specific guidelines into what is counted as service at specific organizations. The rulings with the state law is mostly applied to the states of California and Texas that will contract, the hospitals will contract out entities that will employ like physician's assistants and doctors. And so those people were excluded from PSLF. And now that's not the case. As long as the core organization they work for is a hospital registered nonprofit, they can get that time counted. And of course, I'm at point number 5, more relaxed rules towards counting payments. So what this means is, and I mentioned this already, if you paid 15 days late, they wouldn't count that payment. If you made a lump sum payment, if you split up making payments, though, all those payments would not count towards a qualified payment. Now, splitting up your payments, let's say you pay twice a month with every paycheck. With your paychecks, you pay twice a month and you pay twice. As long as you make the payment, that counts as a payment. If you're more than 15 days late, as long as you pay in full, it's counted as a payment. So they're creating more flexible ways so that the program and system can work with people and still count their payments. So I know I mentioned that earlier, but that is, it's part of obviously helping people get more payments counted, but having more flexible payment terms. So if you are ever in doubt of, wait, I made those payments, why aren't they counted? Just let us know that we're here on standby to help. You can also submit what's called a payment count update letter, which we have here at LoanSense, to capture and get more qualified payments. And of course, I want to mention that Mohila, who manages PSLF, now has this amazing PSLF tracker that will help you in detail count qualified payments. So if you are work for a public servant organization, public service organization, nonprofit, or government, and you are not with Mohila, that means you have not properly enrolled into public service loan forgiveness. And you only have until the end of this year to enroll and get access to the limited waiver that will count as many payments as possible towards public service loan forgiveness, okay? Really important, again, if Mohila is not your servicer, it means you have not filed the correct paperwork to get public service loan forgiveness time counted. So if that is your circumstance and you're like, I'm with NowNet, I'm with Aid Advantage, I'm with Name the Servicer, and it's not Mohila, that again means you are not enrolled properly into PSLF. So do not hesitate to get a free analysis. We are here on standby. MyLoanSense.com. Get started for free. Get a free analysis. Let us know if we can help. Again, MyLoanSense.com. And we hope this was a useful update. We will be here next week.